Hey everyone, welcome back to Corporate Decoder, where we peel back the layers of big business, and today we're diving into a report that's all about a company getting ready to make a big move. Think of it like getting a backstage pass to a company's launchpad, except instead of rockets, it's about business combinations, and trust me, this one's got some interesting fuel. Before we blast off, if you love demystifying these financial documents and want more insights like this, make sure you're subscribed. We also have a fantastic community over on Discord, linked in the description below, where we break down more of these filings and share our thoughts. So what are we looking at today? It's an 8K filing from ASPAC to Accession Corp. Now, this form is like a current event report for public companies, basically telling us when something significant happens, and in this case it's all about a new financial agreement, specifically a promissory note. This filing tells us that on July 14, 2025, ASPAC to Accession Corp, or simply the company as they call it, issued a promissory note. Imagine it as an IOU, but for a larger amount and with specific conditions. This note is for a principal amount of $152,000. It's unsecured, meaning there's no specific asset backing it up, and it was issued to ASPAC 2 Holdings Corp, which is the company sponsor. The sponsor is essentially the entity that gets the SPAC, or Special is essentially the entity that gets the SPAC, or Special is essentially the entity that gets the SPAC. Now, what's really interesting about this note is when it's due, it's set to be paid back no later than the date the company actually finds and merges with another business, what they call an initial business combination. This is pretty typical for SPACs. They raise money to find a target company, and these kinds of notes help keep the lights on and cover expenses during that search period. And here's another neat detail. The sponsor has the option to convert this note into warrants. Warrants are like options that give you the right but not the obligation to buy a company's stock at a certain price in the future. So if the company does well, the sponsor might choose to convert this loan into warrants, betting on future growth. The conversion price is set at $1 per warrant, which is a common figure for these types of SPAC warrants. And the best part for the sponsor, this note doesn't even charge any interest. Where does this money go? The filing states the $152,000 will be used to cover various expenses and for general working capital. Think of working capital as the money a company needs to operate day to day, paying bills, salaries, and other operational costs. It's essential to keep the engine running while they search for that perfect merger target. It's worth noting that this company doesn't have any securities registered for trading on a stock exchange under Section 12BE of the Act. This is common for companies in their early stages or those structured as SPACs before they've completed their business combination. The filing does list the company's registered securities, which are things like units, and within those units, Class A ordinary shares, rights, and warrants. These are the building blocks of the SPAC structure designed to attract investors and give them multiple ways to potentially profit. The ticker symbols are also listed, with ASCBF being associated with the Class A ordinary shares. The company has checked the box indicating it is an emerging growth company. This means they can take advantage of certain relaxed regulatory requirements, which is pretty standard for newer, smaller public companies. And finally, we have the exhibits. The most important one here is Exhibit 10 point, which is the actual text of this promissory note we've been talking about. It also notes Exhibit 104, which is the interactive data file for the cover page, formatted in something called inline XBRL. This is basically an updated way to present financial data so computers can read and process it more easily. The report is signed by Serena Shi, who holds the title of Chief Executive Officer. This shows that the company's leadership is aware of and responsible for these filings. So what's the story here? ASPAC 2 Accession Corp is a SPAC, and like many SPACs, it's in the phase of searching for a company to merge with. This $152,000 promissory note, provided by its sponsor without interest and with the option for conversion into warrants, is a vital lifeline. It's not a massive sum in the grand scheme of corporate finance, but it's enough to cover operational expenses while they scout for opportunities. The structure of this note highlights a key aspect of SPACs. They rely on their sponsors for initial funding and support. The sponsor is essentially betting on their ability to find a good merger target and ultimately create value. The lack of interest and the convertible nature of the note are incentives for the sponsor to remain engaged and optimistic. What are the notable risks and opportunities? The main opportunity for a SPAC like this is, of course, a successful business combination that creates a valuable publicly traded company. The risk is that they might not find a suitable target within their time frame, or that the market conditions change unfavorably, leading to the SPAC's dissolution and the return of capital to investors. The $1,200 to investors, the $15,000 is a small amount to keep operations going for a long time, so the urgency to identify and close the deal is probably quite high. In conclusion, this filing is a snapshot of a SPAC actively managing its operational finances. It shows a company diligently working towards its primary goal, finding that strategic merger. While there are no groundbreaking financial figures here to analyze in terms of revenue or profit that will come after a business combination, this report tells us the company is continuing its operations with sponsor support. It's a small piece of a much larger puzzle that SPACs present, and we'll be keeping an eye on whether ASPAC Sue Acquisition Corp finds its target. Alright, that's our breakdown of ASPAC and Acquisition Corp's latest filing. What's your take on the role of sponsors in SPACs and their financing? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into the world of corporate finance. Don't forget to check out our Discord community in the description for more in-depth discussions. Thanks for watching, and we'll see you next time.